Hello and welcome to the weekly video update from Nour Al-Hammoury with coordination with Orbex. We will start talking about the recent economic releases in the US, which keeps on supporting the idea of a rate hike by the Federal Reserve in December meeting. Almost the entire data last week came in much better than expected, including the Richmond Fed Manufacturing Index. We had the existing home sales, durable goods. The core durable goods also had an increase of more than 1%. In addition to that, we had the house price index and finally the new home sales. Even though there were some negative data, such as the jobless claims and the goods trade balance deficit, yet most of the data is supporting basically the Federal Reserve or supporting the Federal Reserve possible move in December of this year. However, if we look again at the US dollar index, the equities market, and also the bond market, the move continues to be very volatile. The US 10-year yield is already above 2.3%, and the US dollar is above, or the US dollar index is above 101, while equities are still moving higher by the days. But for the time being, we're still assessing the US data, and we will keep a very good margin for a possible surprise by the Federal Reserve in December. However, from now until then, it seems that the US dollar index might continue to rally in addition with or side by side with the US equities. So this is a quick overview about the US or the US in this video, but now let's have a look at the upcoming releases for the week ahead and follow the technical charts that we talked about in our previous video. Starting on Monday is expected to be a very calm day this week due to the lack of fundamentals across the board, even from whether it's from the US, Asia, and even also in Europe. But the only thing that we'll be waiting on Monday is basically the ECB Draghi, who has also who's due to testify in front of testify about the European Central Bank's perspective of the economic and monetary developments and the consequences of the Brexit before the European Parliament Economic Committee in also Brussels. This might have some sort of a slight impact on the market, as this might not give us any more information about what the ECB is expected to do in December of this year, just like what the ECB Mario Draghi have said before, that the bank is expected, or the bank will give us more information in December about what's going to happen in March of next year, where the QE is expected to end according to the previous decision. As for Tuesday, or going into Tuesday, we have also many economic releases throughout that day, beginning with Japan's household spending and the unemployment rate and retail sales. The Japanese data are expected also to be very mixed, but mostly weaker, but slightly less weaker than the previous data. Household spending may decline by 1%. Retail sales is also expected to decline by 1.5, which would be the 8th monthly decline in both householding spending and unemployment rate. The retail sales. Unemployment is expected to remain at 3%. This definitely would put more drag on the Bank of Japan. In Germany, France, and Spain, inflation data is expected also to be released during Tuesday, and the estimates are this is the initial data from these countries, but most of the estimates are looking encouraging, especially in Germany, where it's expected to go up by 0.2%. The CPI, the year-over-year flash estimate for Spain, is expected to slow down a bit to 0.5, and in addition to that, we have the French consumer spending, UK net lending to individuals and mortgages approvals, and these data are expected also to have some medium impact on the market. In Canada on Tuesday, the current account, and in the US, which would be the most important, we will be waiting for the initial GDP, the revised GDP data for the Q3 of this year, and the estimates are to rise by to be revised up to 3%, up from 2.9%. In addition to the consumer confidence index. Finally, we will have some of the members of the Federal Reserve, or the FOMC members, including Dudley and also Powell, will be speaking on Tuesday. Going further also to Wednesday, beginning with New Zealand, the Reserve Bank of New Zealand will publish the financial stability report and business confidence, and this might also have some impact on the market, especially if the bank showed, or if the bank gave us any hints about the future policies. We have the industrial production in Japan, which is set to have also a notable impact on the market, because again, Japan is relying on industrial sectors more than its consumer spending. the estimates are to rise by 0.2% only. Going further also to the European session, we'll have German retail sales and jobs report in Germany. Also, the most important event for this session will be from the Eurozone, where we will be expecting the Eurozone CPI and core CPI flash estimates. And the estimates actually for this day is quite stable a little bit, as the estimates are for the year-over-year CPI to remain at 0.5%, and also the core flash CPI to remain at 0.8% again. We will be waiting also for the UK bank stress test results. But again, as for the US session, we have also more important data, including the ADP non-farm employment change, Chicago PMI, personal spending, personal income, and pending home sales for also the US. The ADP, which is the most important, I guess, for this session, is expected to rise by 161,000 in new jobs. In addition to that, we have the Canadian monthly GDP, not the quarterly, which is also expected to rise by 0.1% for last month. Finally, we have also during the whole day, we have the OPEC meeting, which they are basically expected to announce their deal to cut or even to freeze the production. But it seems that this time it might not happen even again, because at the past few days they've been talking about there's no deal, or there's no general consensus about getting into a deal, especially from Iran and also Russia. In addition to that, we'll be waiting for the crude oil inventories, but so far we don't believe that they will release or they will come up with a clear deal. They might delay it again and say that we will give you more information by the end of this year. Going to Thursday, we have also a lot of economic releases, which is this day will be about the PMIs, beginning with China PMIs. We have Euro area and UK manufacturing PMI. In the US, we'll have the same ISM manufacturing PMI, but in addition to that, we'll have the jobless claims, construction spending, and a challenger jobs cut, which comes usually before the big event in the US, which is the non-farm payrolls. The jobs cut has no estimates, but the previous number came in at minus 39.1%. As for Friday, which is the biggest day of the week, beginning of the Asian session, we'll be waiting for Australia's retail sales, the Swiss GDP during the European session. In addition to that, we will be waiting for also the Spanish jobs report, the UK construction PMI, and the Eurozone PPI. Most of these data are expected also to be positive and looks to be encouraging somehow. But the most, again, even if these data that came in with much better than expected, or any negative surprise, the most likely that the effect will be only for a short period of time, because the US and the Canadian, or especially the US jobs report, will overshadow any positive or negative impact or any negative surprises on the market. The US jobs report is expected to add 165,000 in the month of November. At the same time, if we look at the unemployment rate, the estimates are to remain stable at 4.9%. But the most important thing to look at in these data will be the average earnings index, which is expected to rise by 0.2%, sorry, after 0.4% in September. So these are the most important economic releases for the whole week, but we will also be sending a special reports about the US jobs report on Friday in the morning, to give you some sort of an idea about the expected scenarios and the expected or the possible scenarios of the US jobs report. Let's go ahead also and look at the technical charts that we showed last, or the one that we talked about last week. Beginning with the euro, finally we've seen some sort of our target actually has been hit, which is around 105.55, which was the almost the lows that we've seen in December of last year. However, this basically has triggered a bounce, almost like from 105.55, we almost reached the 106.20s, but at the same time the pair failed to keep on gaining, and also closed the day, or the last day on Friday, lower. But we have a doji here, and also we're still not sure about this bounce, but technical indicators are started to turn higher, so we still actually believe that we might see some sort of another stabilization all the way to Friday, and then this might be, or Friday's jobs report might be, a catalyst for another leg lower in the euro, which might actually target the next target would be at least the lows that we've seen on
in December also of last year around 105.19. This is the first level that I'll be looking for. As for the upside, I'll be looking for at least resistance, the immediate resistance area, which was Friday's high at 106.20s, followed by 107 or 106.57 or 60s. This is for the euro. Looking at the dollar yen, which also continued all the way up again and reached one of our targets, which was around the 50% retracement of the 50% retracement of the recent decline, sharp decline for the dollar yen, and already passed that level all the way, and we reached almost like the 14 levels area, but at the same time we closed at 113. Yet this is a very positive weekly close, and also on the monthly chart. The monthly chart shows a very good indication for further gains ahead in the next few days or in the next few months. But at least for the time being, we will be waiting for another confirmation for this weekly close. And at the beginning, at the same time, the immediate resistance right now basically stands around this level, which is a 114, which is a key resistance that almost we touched it last week. In addition to that, we have to look at the 100-week moving average, which would be 114.80s. Technical indicators are still higher, but stochastic is heavily oversold, but the RSI is still positive and it's still way less or below the 80 barrier or the 70 barrier. So there's could be some more room for more upside ahead, but those are the two levels that I'll be looking for right now. Support area around 1244, and the resistance for this week will be 14, a break of which would be the next move. Going into the British pound, the British pound basically continued to trade within an hour range, but at the same time we also the pair managed to stay way or well above the 123.08, the one that we talked about it also last week, which is the same resistance of the past of October, once we saw a break all the way up and then we twisted back. So right now we're getting closer to the 50-day moving average, which is around 125, and this level will be very strong in the next few days and need to be watched very carefully. The RSI is above 50, and also the stochastic is also forming more and more upside. The most important thing is that this is after the budget move or after the budget release, which was supporting some sort of an idea of a better taxation for businesses, and also the business investment has increased also significantly in the past quarter despite the Brexit. So that's why the British pound was one of the strongest currencies during this week. For the time being, I'll be looking at the resistance area at 125, a break of which would lead for more or for another bounce, maybe all the way to 126. But at the same time, don't forget that there's a trend line and the 50-day moving average, so a short opportunity would be even more likely at these levels all the way back to 123. Going to some metals also, gold continued also and broke through the 50% Fibonacci retracement and lost also the $200 barrier and continued all the way down and quickly within few days, or actually 2-3 days, all the way to the lows of 1171, which represents of the 61.8% Fibonacci retracement of the recent rally of the whole year, actually since since December of last year until the highs of June, and then right now we're retracing all the way back to 1170s. This would be a very good indication of a buying opportunity, especially that after the bounce that we've seen at the end of the week, especially on Friday. However, we still need some sort of a confirmation to see or to assess that another upside rally could be seen. Technical indicators are still heavily oversold, therefore I won't be interested even to buy to short at these levels. I would be interested to buy on dips for the time being. Finally, look at the S&P 500, and we were actually wrong about it last week. We had a negative divergence on the daily chart at some point, and then we saw a break above that level, which is 22.05, and then we reached 22 almost 08.09, and then another test of that resistance, which basically continued to be as a very good support for a few hours, and then at the end of Friday we've seen that huge another rally all the way above at 212, and which is also another record high. So far, again, I wouldn't be interested even to touch the U.S. equities for the time being, ahead of the Federal Reserve decision and also ahead of the US jobs report on Friday. Those are the technicals and the fundamentals for the week for the week ahead, and those are the levels that we'll be looking for the next few days.
So this is it for this video. I hope it was informative for you. And again, I would like to point out that this video is for information and educational purposes only, and not to be taken as an advice. Thank you for watching, and I'll see you once again next week.